Hey traders, welcome to Charts and Coffee. Hope everyone is having a good Thursday morning. All right, so we've got a couple things on the schedule today for Thursday. And, I think the biggest thing to kind of kick things off with, as we're still getting through the very early part of January, is the year really began the Monday. If you really want to get to it, what do I mean by begin? Some of the major events that, well, frankly, investors and traders are waiting on is just this 4-year cycle. And of course, it's the inauguration. And from there forward, we know what the shifts are going to be from administration to administration. And again, this is just a pattern, right? That's all that it is. It's a pattern, meaning there's no reason to assume that what we thought was true in Q4 is necessarily, especially from a standpoint of regulations and such. We got an echo. If you want to know a little bit about what January could do, and this is something I've been thinking a lot more about when I go back and look at my notes from 4 years ago. November oftentimes gives us some foreshadowing into post-inauguration January, meaning if you take a look at the way in which the S&P, the NASDAQ, and even specific sectors behaved in November, the two that were markedly shifting with that election result was energy. XLE went straight up. Now you'll notice in December it unwound again, but that post-election reaction was very, very clear. And the assumption is less regulation could be good for oil stocks, but not necessarily for crude. You'll see financials, XLF did something similar. So one of the things that we're doing right now in the mastery, now take a look at crude oil. Crude oil did not benefit from that post-election result. So you think to yourself, all right, it may not be a crude oil setup going into this post-inauguration cycle, if you will, that mimics a lot of what we already saw after the election in November. What we do have is some clues as to what traders were thinking could happen going into 2025. So one of the best things we can do, and we're going to do this in the Sector Secrets Mastery Room today, when we shift into swing trading mode at 10:30, and I'll be in the Simpler Central room for this too. So if you're in Simpler Central, or if you're in the Sector Secrets Mastery, or as I like to call it, the Sector Fu Mojo Dojo trading room, we will go over what did November tell us about certain types of behavioral trends and expectations that we could have again this week going forward. Those are going to be different rhythms that if they play out, at least they're on the watch list. So yeah, XLE is on the watch list. Financials, especially now that we're past earnings, are on the watch list. All right, there are a couple events to be aware of for today. Number one is the World Economic Forum is going on, and the president will be speaking at 11 a.m. Will it have a lot of movement in the equity markets? I don't know. The president's going to be coming in via satellite. Obviously, I would keep an eye on currencies. I would keep an eye on certainly treasuries, things of that nature. But it is a hot zone. It's a scheduled impact event where obviously we have to pay attention to potential volatility. Two ways to handle it. Have setups ready. And if the volatility of the event triggers the setups, great. Or get flat, right? Get flat, say day trades or trail stops, tighten stops, etc. on day trades. At 11 o'clock also, we're going to have our crude oil inventory. So whenever there's a bank holiday during the week, especially on the Monday, it pushes crude oil inventories after natural gas inventories to Thursday. Crude oil inventories will probably have as big an impact on crude as well as OPEC as we're trading crude this year. The supply-demand narrative is always obviously an important one. And by the way, what is supply? Let's go back to economics 101. Supply is more of the stuff. Demand is wanting more of the stuff, right? Supply is typically resistance. Supply is typically selling pressure, right? If there's less of whatever it is, in the case of commodities, crude oil, if there's less crude, price tends to go up. If there's more supply, price tends to go down unless it's met and then exceeded with by increased demand. And so right now, probably the easiest thing to measure is simply supply. whether that be EIA numbers, IEA numbers, OPEC production, and even what the U.S. might do to ramp up production. But remember, it's only the crude that hits the market. So it's not an easy story of, hey, crude oil inventories are up, although clearly more supply, again, is bearish, more demand or less supply is bullish. So keep an eye on crude, 11 o'clock inventory numbers. I will still stick with the plan in the Sector Secrets Mastery, which is let's stick with oil stocks. And we have a list of oil stocks that we're keeping an eye on because oil stocks are likely a smoother path to increase strength to uptrends than, say, crude oil itself, right? Okay, that said, let's also remember that natural gas, it's easy to forget that natty gas has also been trending higher since November as well. And it's not a pretty chart. Natural gas is here's its nickname, just to get, this will tell you everything you need to know about risk management in natural gas. It's called the Widowmaker. Fortunes have been made in natty and fortunes have been lost in natty. It's wildly volatile. That said, it's got a trend. So there's at least a little bit more expectation of follow through to the upside than not. You can trade natural gas, sans a lot of the leverage that does make natty futures as risky as they can be with UNG. All right, UNG. So you can play UNG shares, you can play UNG options, and yes, you can play options on the futures contract of NG. Now, there are also, so let's think about this. If crude oil has a set of crude oil stocks in terms of companies, so too does natural gas, and that's in the FCG. Now, some of these connections between commodities and the sectors and the stocks that might benefit from the movement up or down is interesting. Come check out what we do in the Sector Secrets Mastery, because that's really the not so secret. How do we understand the way one index or one commodity, one narrative could benefit other names? And then we go about finding which stocks are responding in kind, because just because there's a narrative doesn't mean it's going to be a rising tide for the overall sector. Certain stocks are going to benefit more than others. And that's the process, right? Watch list building and waiting is 80% of trading, right? 80% of what you and I do. The actual trade entries, the actual doing of the trade, putting in the orders should really be 20%. And whenever traders come to me and they're struggling to find consistent account growth, right? Those are the three words I live by: consistent account growth. I usually find one of the easiest things to tell traders to do is whatever your current trade number of trades are, cut it in half. It immediately forces you to find the best trades. It immediately forces you to just only take the very, very best setups, as opposed to maybe not as discerning an approach where, well, it looks good enough, is going to merit an entry. We want to actually, that's one of the easiest things to do, because 80-20 Pareto principle works, but what does that really mean? It usually means fewer trades. And that usually means more filters, more stringent criteria. What are all the whys? You want at least 2 or 3 before you get into a trade. The worst traders usually have one reason, and they hop on in. And then they wonder why the quality of the trades are not where they need to be for a consistent account growth type life, right? That's what we all want. All right. So there's a question here for the Dow. Sure. In terms of the Dow, I'll tell you this, my friend, there are 2 indices that were very weak, weaker than another 2. So Dow and Russell were actually downtrends for a brief amount of time earlier this month, right? They've shaken it off because there's a lot more optimism, at least neutral trend, bullish chop, if you might. Here's one way I would look at this. I would call this a neutral trend, bullish momentum. And as of only the last 3 days. So that said, and this would be Tuesday, this obviously is Wednesday, and that tiny candle right now is today's candle. The weekly time frame is beautiful, right? So it depends on what time frame you're looking at. And that's another thing that I've been talking about in the free video. So you can benefit from this in the free videos as well. And that is, gang, remember, when I was a kid, I used to call into the radio station, totally dating myself, and you'd ask for your favorite song, play me whatever. If I was in middle school, it's probably a lot of Duran Duran. All right. So I would call in a request, right? But as I get older, right, and I'm thinking about kind of the request nature of thinking about market analysis, it's not enough to look at the Dow. We have to get specific to the time frame, right? It's not enough to say, hey, let's look at the Dow. Which time frame? And I've got four that I'll look at: day trading, short-term swing, long-term swing, and more of a position trade. So four different time frames. Depending on the time frame I'm looking at, I might be dealing with a completely different set of support and resistance, market structure, right? What trend preceded the current, market structure. So if we look at the weekly, very easy to be bullish the weekly, right? If I'm looking at the daily, again, a very different look than the weekly. So when we're thinking about any symbol, let's normalize this idea of the symbol is as important as the time frame, right? And that's going to be also leading us to a time horizon. If someone says, hey, Rog, I'm interested in what the Dow could do over the next year. Well, nobody knows that answer. You'll get an answer from most people. I'll tell you nobody knows, and we'll talk about what it's doing now and the probability of continuing, right? But nobody knows where things are going to be a year from now. I usually turn on television and turn it off because it just hurts your brain, the amount of people that will come on with a straight face. And one adult will tell another adult they know what's going to happen 12 months from now, right? Does anyone know who's going to win the Bills Chiefs game this weekend? And can y'all tell me the score? And can you tell me what the score will be each quarter? That's what they do on television, and grown adults just nod their heads and blindly follow. That's the level of lunacy on sort of mainstream financial media, right? So the first thing is, do I want to be a bull or a bear? How long could my time horizon, the time that I'm in the trade, be? And then that's going to ultimately lead me to looking at the time frames that I've chosen. Now, you might have different time frames than mine. That's fine, of course, right? But have a time frame for the job. One of the things we went into a lot of detail in the Sector Secrets Mastery Room yesterday was the difference between what I don't do, which is multiple time frame confirmation, presuming that the 5 minute and the 1 hour and the daily and the weekly and the monthly all have to hold hands in order to get a trade on. All that's going to do is lead to very delayed entries, right? I don't use multiple time frame confirmation. I do want to use multiple time frame comparison, because sometimes the best setup isn't on a 1 hour chart. Sometimes the best setup is actually on the weekly, which is actually the case with the Dow. And I hope that makes sense. Now, if you're wanting to go a little bit, below the surface, what's in the Dow? Financials, technology, healthcare, energy, industrials, transports. Those 6 sectors have varying degrees of influence. The number one sector in the Dow, industrial average, are financials, right? Followed by tech, followed by healthcare. And so when we think about what's moving the Dow, it's distinctly different than what's moving the S&P and the NASDAQ, which again leads us to, we never want to paint the entire marketplace, right, with one brush. In fact, the statement of the market is actually a meaningless one, right? For the most part, when we all say it, and I'm guilty of it too, we're usually alluding to the S&P, right? Or general risk appetite. But general thinking is lazy thinking, right? So I want to take that out of the way that I think about anything. If I'm talking about indices, I'm going to compare those 4: Russell, S&P, NASDAQ, Dow, right? If I'm thinking about energy, I'm going to again look at RBOB gasoline, crude oil, natural gas, heating oil, whatever that group is. If we're taking a look at tech stocks, obviously we would compare and contrast, the Mag 7. They're not always all going to move together, nor do they really have to. One of the things that a lot of traders find in a trending environment where a rising tide tends to lift all boats as opposed to chop is it is a stock picker's market. I think it's always good to think about trading as if it's a stock pickers or sector pickers market, right? Getting specific to the most clear trends up or down in whatever the environment is. So if I'm in a bearish environment, I'm looking for the best examples of a downtrend. If I'm in an overall bullish environment, I'm looking for the best examples of uptrends, not the opposite, right? A lot of traders will say, well, what can be short? And my answer to that is going to be why. We're still looking at least one, if not two, rate cuts from the Federal Reserve. We're still looking at, a monetary policy that's a full 100 basis points lower than it was just in September. We're looking at some economic optimism. At least that's what's playing out right now. And it has nothing to do with what I think, right? It has nothing to do with what I feel and every other kind of biased opinion that obviously we're all going to have. It's what do I see? We've been in chop for the better part of December. We're emerging from what was bearish chop in the S&P to now bullish chop, but it's still chop, right? If I take a look at the NASDAQ, very similar story. If I take a look at, although a little less bearish than the S&P, and certainly less bearish than the Dow, which was in a downtrend, and now it's arguably in bullish chop. And then we head on over to Russell, which was also in a downtrend, much like the Dow. And now this is at best in bearish chop. So the weakest index is the Russell. The strongest is the NASDAQ. And then you've got, again, now you've got a hierarchy of, if I want to be bearish, where do I go? If I'm looking for things that are a little wobbly, a little weak, where do I want to go? If I'm looking for things that are strong, again, a watch list shouldn't be one list. It really should be two. What's bullish, what's bearish, and depending on what you need, you go to one of those two watch lists. All right. So let's see. Got a question here on Oracle. Sure. All right. So we take a look at ORCL. One of the things that we like to do, and I get why people are looking at it. It's moving straight up. But here's the thing. Sadly, this is what ends up on most traders' radar. And I say sadly because this is something that's happened suddenly. It's very difficult to even time. It's more difficult to even trade. Same thing goes for something like Netflix, right? So this is the equivalent, a trade, say, in Netflix, when it was in a downtrend. A trade in Netflix is the equivalent of going to the gas station and buying a $2 scratch-off lottery ticket. And that's fine. A lot of traders are perfectly content relegating their trading success to the odds of winning the lotto. I won't do that with my family or my money. So what I keep in mind is those are very exciting moves, to see something like Netflix or to see something like Oracle. But those are not the kind of symbols that we're going to find on a regular basis, be able to take advantage of on a regular basis. And therefore, they're not the kind of symbols or approach that lead to consistent account growth, right? Now, that said, if you ask me, Rog, what about the weekly, right? So thoughts on Oracle mean what? It doesn't really mean anything. What time frame? What time horizon? So day trade, obviously, I can't tell you at 9:18 in the morning, but a 1 hour chart, I'd probably be neutral to bearish. On the daily chart, that's a downtrend, gang. I know it's launched into the stratosphere, but I would still treat this as generally heavy or just not trade it at all. It's really a confusing looking chart because it's moved 30 some odd points in 2 sessions, right? So it's exciting to look at, but to me, this is really what's untradeable, at least for me. Now, day trading wise, this might be fantastic. So if the question was, hey, can we day trade Oracle? Different conversation, right? Now, if the question was, what about the weekly time frame? This was a mean reversion, gang. We had a mean reversion on Oracle, right? Right there. And that pullback into the mean reversion, that's a longer term share buy for the way that I look at position trades and that type of portfolio. All right. So that is what we're looking at there on Oracle. Thanks for the question. Again, let's think about symbol and time frame. All right. Let's see. So yeah, Lorna, that's okay. Hey, patient BG, if you're still out there, you got scammed. Sorry. I'm not on TikTok. And this is a great way to end the session. There are a lot of people that are impersonating me, right? After doing this for 30 some odd years, I'm sad to say, as good as my reputation and my brand of trading is, the downside to that is a lot of people impersonate me and they ask you for money. And someone like you, apparently you gave them money. That has nothing to do with me. I'm sorry it happened. Can't help it. On TikTok, the last time I was on TikTok, and I don't use the app, but The reason I don't is there's probably over, no kidding, 70 fake me's on TikTok. Why are there fake me's on TikTok or Twitter or Instagram? I don't use Telegram. I'm not WhatsApping anybody. If you want to know what I'm doing, if you don't see my face and you're not getting simpler trading content, or you're not on my YouTube channel, and my usernames are always going to be Raghee Horner, not Raghee Horner, 74572, not Raghee Warner. Like, look at this spelling. And I'm telling you all, there's no way to get ahead of it. They're out there, they're vicious, and they will take your money. All right. So it's kind of ironic that you found the real me after getting scam patient, BG. I do definitely sympathize, but wasn't me, for crying out loud. So anyway, he's not a hater. That's okay. I appreciate everyone. I appreciate when you got scammed. Okay. So I'm really sorry about that, but that's the story. All right. And this is also a warning. You're a really great lesson of what not to do. I'm never going to ask you all for money via WhatsApp, Telegram, Instagram, X. Tell your friends, not going to do it. And that goes for everybody at Simpler Trading. None of us are going to have the time to get on the phone and one by one sit around for hours chatting with you all about how we want $500 or whatever from you, or whatever the sum is. And nobody from Simpler is going to reach out to you and try to ask you to manage their money. We're managing our own. Okay. So unfortunate reality of the internet, but it is just a reality. So we will never direct message you to solicit funds. Please know that. All right. That's a wrap, gang. Kind of on a sad note, but it's a real note. And if you're looking for content, Simpler Trading, my YouTube channel, any username that's Raghee and Horner. That's it. I'm on Instagram. I'm on Twitter. And I'm on YouTube. That's pretty much where I like to be. All right, gang, be good to each other. Careful out there. There's some real scumbags trying to take your money. Heads up for the hot zones. And I'll see you all tomorrow, same time, same station.